Hello traders, I got few questions about measuring the correct candle after liquidity grab. That some of you are struggling which candle to choose, where could be the possible entry of, or if that was really the liquidity grab. There are maybe two ways of measuring this correctly. I use the strong candle with imbalance, but not all of you are using the footprint chart. So another correct method technique is to measure the broken support, for example, to the end of liquidity grab. Bit different, but it's working as well. Let's do some example. Here is the M5 demand zone, the small order block. This is the price action from Friday, and here we have the equal lows, yes, as a support. Then we had nice move, very sharp, and the supply was broken. So another way is like to take this support to the end of potential liquidity grab. As we see the broken supply, so this could be the way, taking the stop losses. Just to confirm on footprint, and this day, this one candle, the liquidity grab. It has the imbalances, and the one was broken heavily, and this here, yes, at the end of the candle, 6 to 1, not completely zero, but this is the broken imbalance. Price broke it, even here rejection, and came up. So for me, this move here was the liquidity grab, just as confirmation, of course, for those who don't use the footprint. I would measure this from support to the end, and then watching the retest if price is going to the 50% of this move. Then for example, today maybe I missed the trade, but it was here. Yes, I didn't mention this price action on the summary of the day. I just found it now with this way of measuring. If here is the main 1 hour supply, and sorry, I'm tired, the demand zone, and price is creating here something what looks like the support is sitting somewhere, and then is shot to the up and immediate move to the upside by breaking this supply. This could be read as a liquidity grab as well, and by measuring from the support to the end of the move, like here, we could look for the entry. If the volume, of course, came down, let's check this, and the volume came down after reaction with this 50. So the safety P could be the previous equal highs, and in this case it was like 9 pips. But this is just another way of measuring. Here on the previous price action, the safety P was also the previous equal highs, which were here, and this was like 17 or 18 pips. Good trade. Different way, yes. This is if you are really struggling which candle to measure, which one, if you don't use the footprint. In similar way, I try to take a buy from the lower demand zone. You can see that here were the equal lows above the demand to the end of this move, the potential liquidity grab. I entered very early, but here on the retest, price lost volume, and here could be also the entry. I was aiming too high. Good that I still have the risk management, very correct one, and you can see what happened. Price decided to choose the third demand, the lowest one. Extreme move, really. So I hope that this can help you. This is not on the course, this is not the way I am measuring all the time, but maybe it can help you just in your first steps with this course, how to recognize the liquidity grab and the potential entry level after this movement. So as a summary, we need to see the support and resistance near our areas of supply and demand, then sharp move with increasing volume, and then calming down to the 50. In this scenario, I should enter later by measuring this way, because here was the break of all the supplies. He was very aggressive. Yeah, I just chose the first supply on the way, very small one. Maybe this will be easier way for you. It's easier to draw. I missed this one because I was focused on the deeper invader, and the price decided to do what it did. For some sells, he could be missing setup with this technique, because here we have the resistance, the whole move as here. Yes, it was the first potential move, but price shot to the up, didn't lower the volume on the 50%, so it made a sell invalid from here. But with footprint chart later, here was the correct entry with seeing the good imbalance. But without, we are trading bit blind. This is also good way of measurements. But honestly, I'm not using this. I like to see the imbalance, the deep inside the candle. But this way, I hope that can help the new members to see where we are in the market, how to join after liquidity grab. Thank you for watching.